Hey there, future Wall Street wizards. Ever wonder how some options traders seem to have a sixth sense? Like they can predict the market's every move? Well, I'm here to tell you it's not magic. It's fundamental analysis. Think of options trading like surfing. Sure, you can ride the waves blindly and hope for the best, but wouldn't you rather understand the currents, the tides, the wind? That's what fundamental analysis gives you. The knowledge to ride those market waves with confidence and skill. In this video, we're diving deep into the world of fundamental analysis for options traders. We'll uncover the secrets hidden in company financials, earnings reports, and even the broader economy. Get ready to level up your trading game. Let's face it, options can be risky, but they don't have to be a shot in the dark. By understanding the fundamentals, you gain a powerful edge. You'll be able to spot undervalued companies, predict future growth, and make informed decisions about your options trades. It's like having X-ray vision into the heart of a company. You'll see beyond the hype and get a clear picture of its true value. Are they making money? Are they growing? Are they drowning in debt? These are the questions fundamental analysis helps you answer. Don't worry, it's not as complicated as it sounds. We'll break it down into bite-sized pieces so you can start applying these techniques right away. Get ready to unlock a whole new level of trading expertise. Alright, first up, we're tackling the balance sheet. Think of it as a company's financial snapshot at a specific moment in time. It tells you what the company owns, assets, what it owes, liabilities, and what's left over for the owners, equity. Now don't let the fancy terms scare you. We're just looking for the good stuff. Check out their assets. Do they have a lot of cash on hand? That's a sign of financial health. How about inventory? Is it piling up or are they moving product? On the flip side, we've got liabilities. How much debt is the company carrying? A little debt can be manageable, but too much can be a red flag. You want to see a healthy balance between assets and liabilities. Remember, the balance sheet is your starting point. It gives you a glimpse into a company's financial health and helps you understand its overall financial position. But we're just getting started. Next up, we're diving into the income statement. This is where the real action is, folks. The income statement tells the story of a company's profitability over a period of time. It shows you how much money they're bringing in, revenue, and how much they're spending, expenses. The bottom line we're after here is net income, also known as the company's profit. Are they in the black or the red? Ideally, you want to see consistent revenue growth and healthy profit margins. Keep an eye out for any unusual fluctuations in revenue or expenses. A sudden drop in sales or a spike in costs could be a sign of trouble brewing. You want to see steady growth and predictable earnings. Remember, the income statement reveals a company's earning power. It helps you understand its profitability and its ability to generate consistent returns for investors. But wait, there's more. Now let's talk about the most important financial statement of all, the cash flow statement. Why is it so crucial? Because cash flow is the lifeblood of any business. It shows you how much cash is actually flowing in and out of the company. The cash flow statement is divided into three sections: operating activities, investing activities, and financing activities. Operating activities show you the cash flow from the company's core business operations. Investing activities track cash flow related to investments such as buying or selling property, equipment, or securities. And finally, financing activities cover cash flow from debt, equity, and dividends. By analyzing the cash flow statement, you can see if a company is generating enough cash to cover its expenses, invest in growth, and even pay dividends to shareholders. Now that's what we like to see. The main event. All right, options traders, listen up. Earnings season is like the Super Bowl of fundamental analysis. It's when companies report their quarterly financial performance, and boy, can it get wild. This is your chance to see if your fundamental analysis is on point. Think of it like getting a report card on your favorite companies. Did they ace their exams, or did they flunk out? Earnings reports tell you how much money a company made or lost, how much revenue they generated, and what their outlook is for the future. Now here's the thing, options traders live and breathe earnings season. Why? Because these reports can cause huge swings in stock prices, and that means big opportunities for options profits. Get ready for some serious volatility. So how do you stay ahead of the game? By understanding how to analyze these earnings reports like a pro. We're about to break down the key components you need to watch out for. Don't let those earnings reports intimidate you. They may seem like a bunch of financial jargon, but we're going to decode them together. First up, focus on the earnings per share, EPS. This tells you how much profit the company made for each outstanding share of stock. Next, check out the revenue. Did the company beat analysts' expectations, or did they fall short? Revenue growth is crucial, especially for companies in growth industries. But it's not just about the numbers, folks. Pay close attention to the company's guidance. This is their outlook for the future. Are they optimistic about the coming quarters, or are they seeing storm clouds on the horizon? Remember, the devil is in the details. Read between the lines, look for any red flags, and compare the company's performance to its competitors. Knowledge is power, my friends. Now here's where things get really interesting for options traders. Earnings announcements can create something called an earnings surprise. This is when a company's actual earnings are significantly different from what analysts were expecting. Think of it like this: if a company smashes earnings estimates, their stock price is likely to jump up. On the other hand, if they miss earnings badly, their stock could take a nosedive. And options traders can capitalize on these big price swings. See, options prices are heavily influenced by something called implied volatility. And guess what sends implied volatility through the roof? You got it. Earnings season. The higher the uncertainty, the more expensive those options premiums become. So how can you use this knowledge to your advantage? By understanding how earnings surprises work, and by being prepared for the potential price swings, you can make smarter options trades and potentially profit from the market's reaction. Now that's what I call a winning strategy. Listen up, options trades. We're about to level up your trading game by tapping into the power of macroeconomics. It's just a fancy way of saying the big picture. The overall health of the economy impacts your options trades. The market doesn't exist in a vacuum. It's influenced by interest rates, inflation, and GDP growth. Understanding these forces helps you anticipate market movements. If the economy is booming, that's bullish for the market. If the economy is struggling, that's bearish for the market. Keep your finger on the pulse of the economy to make informed decisions. Remember, knowledge is power in options trading. Next up, we're tackling interest rates. They might seem boring, but they can make or break your trades. Think of interest rates as the cost of borrowing money. Low rates fuel growth and boost stock prices. High rates increase borrowing costs, hurting profits. This impacts your options plays. Higher rates make call options expensive, puts cheaper. So, pay attention to Federal Reserve announcements. Pricing in the unexpected. Hold on to your hats, options aficionados, because we're about to enter the wild world of inflation. Inflation is like that uninvited guest at a party. It shows up unexpectedly and starts eating all the snacks. Inflation is a general increase in prices, eroding your purchasing power. It can be a buzzkill for the stock market. Rising prices mean higher costs for companies. This can eat into profits and make investors nervous. But for options traders, inflation creates volatility, our best friend. Volatility increases options premiums, offering more profit potential. Riding the electric wave. Let's take this fundamental analysis show on the road. Everybody knows Tesla, right? Electric cars, Elon Musk, shooting for Mars, the whole shebang. Imagine we're back in early 2020. The pandemic hit, the market's freaking out, but Tesla's already profitable, their sales are growing and they're ramping up production in China. Strong revenue growth, healthy gross margins, and a pile of cash. Their earnings calls are full of optimism. This could be a great opportunity to buy call options. Tesla's stock price skyrocketed in the months that followed. Those call options would have printed serious profits. Fundamentals in action, connecting the dots. See what we did there? We didn't just look at Tesla's stock price and say, ooh, shiny object, let's buy. We dug deeper. We looked at their financials, their earnings reports, their industry trends, and even the broader economic landscape. We connected the dots and built a compelling narrative about why Tesla was well positioned for growth, even in the face of uncertainty. That's the beauty of fundamental analysis. It helps you see beyond the hype and make informed decisions based on facts and logic. Now, I'm not saying fundamental analysis is a foolproof crystal ball. The market can be unpredictable, and there's always an element of risk. But by understanding the fundamentals, you're stacking the odds in your favor. You're no longer just gambling on hunches or following the herd. You're becoming a more informed, more confident, and ultimately, more successful options trader. Fundamental analysis, your options powerhouse. There you have it, folks. We've journeyed through the exciting world of fundamental analysis for options traders. Remember, it's not about predicting the future, it's about understanding the present and making educated guesses about what's to come. Think of fundamental analysis as your secret weapon, your edge in the fast-paced world of options trading. By understanding a company's financial health, its earnings potential, and the broader economic forces at play, you're setting yourself up for success. So go forth, my fellow options traders, and conquer the market with the power of knowledge. Remember, the more you learn, the more you earn. Keep those charts buzzing, those options flowing, and those profits rolling in. And hey, if you enjoyed this video, don't forget to like, subscribe, and hit that notification bell for more trading tips and tricks. And be sure to check out the video shown above to learn more about options trading and investing. Until next time, happy trading.